You know, corporate earnings reports, they can feel like trying to read a different language, right? Just walls of numbers, endless footnotes, all this financial jargon. But if you know where to look, they tell a really fascinating story. So today, we're going to decipher Microsoft's latest report to uncover this blockbuster narrative about their massive, incredibly expensive, and world-changing gamble on artificial intelligence. So let's just dive right into the big question here. What is the actual price tag for building the future? It's a question that is defining the entire tech industry right now. And believe me, Microsoft's numbers, well, they give us a stunningly clear answer. Well, for starters, here's a big piece of the answer. In just one quarter, Microsoft pulled in $77.7 billion in revenue. And no, that is not a typo. It's a figure that just shows you the sheer scale we're dealing with here. But this number, it's really just the headline. To really get what's going on, we've got to look underneath that massive top-line number and see what's actually powering this financial engine. See, the story isn't just that they made a ton of money, it's how they made it. Okay, so this chart here, it's basically a map of the entire Microsoft empire, which is really three giant businesses. You've got productivity and business processes, think Office 365, LinkedIn. Then there's Intelligent Cloud, which is their powerhouse Azure platform. And finally, more personal computing. That covers things like Windows and Xbox. And you can see right away, the cloud and productivity buckets are the two clear titans here, almost the same size. And get this, every single part of that empire is growing. Revenue is up a really strong 18% from last year. But look at the operating income. That's up 24%. What that means is the business isn't just getting bigger, it's actually getting more profitable. On the surface, it's just an incredible picture of corporate health. All right, now let's zoom in, because the real engine revving behind these numbers is in one specific place, the cloud. This is where the AI revolution is really happening, and it's happening at a scale that is just, it's hard to wrap your head around. I mean, just look at this acceleration. The Intelligent Cloud segment alone pulled in nearly $31 billion. That's a 28% jump from the same time last year. This isn't just steady growth, folks. This is an explosion. And this slide, this right here is the why. When you drill down inside that cloud number, you find out that Azure and other cloud services grew by an incredible 40%. And the company is very clear about what's behind this, just massive customer demand for AI services. Companies are basically flocking to Azure to build and run their own AI applications. But wait, the AI story doesn't just stop with the cloud. Oh no, the genius of Microsoft's strategy is how that core investment in AI creates this ripple effect that boosts pretty much every other part of their business. Just take the segment with Office 365 and LinkedIn. You'd think, okay, this is a huge, mature business, growth has probably got to be slow, right? Wrong. It still grew an incredible 17%. And the secret? You guessed it, they're infusing it with AI. It's all about tools like Microsoft 365 Copilot, the AI assistant that's now inside Word, Excel, and Teams. It's driving people to sign up and getting current customers to upgrade. And you see the same pattern everywhere. A 10% jump over at LinkedIn, an 18% surge in their Dynamics business software. See, AI isn't just some separate product for them, it's the rocket fuel for everything else. Okay, so the growth is just phenomenal, and it's all fueled by AI. But, and this is a big but, what does it cost to make all of this happen? This is where the story pivots from this incredible growth to some truly mind-boggling investment. Now, to really understand this next number, you need to know a key term: capital expenditures, or CapEx for short. Let's break this down real simple. This is the money a company spends on its physical stuff, its infrastructure. And for a tech company like Microsoft, that means building the digital factories of the AI age, these massive data centers packed with thousands and thousands of powerful computer chips. And here is the number that is just jaw-dropping. Microsoft spent nearly $35 billion on CapEx in a single quarter. That's up 74% from last year, all to keep up with demand for their cloud and AI stuff. They are literally building the future, and the price tag for that is almost as much as their entire operating income for the quarter. Just wow. And if you thought that was it, hold on, the spending doesn't stop there. Beyond building all their own infrastructure, Microsoft is making these huge bets externally. If you dig into their financial notes, you'll find this little detail. They've now funded $11.6 billion of their total $13 billion commitment to their key partner, OpenAI. So, how does a partnership like that actually affect the bottom line? Well, this slide shows it pretty clearly. Their official profit was $27.7 billion. But the company also gives us an adjusted number that, takes out the impact from their OpenAI investment. And without that, their profit would have been over $30 billion. So that's a $3.1 billion hit to their net income in just 3 months, all from this one massive strategic bet. So let's step back for a second. You've got this incredible AI-fueled growth on one side, and on the other, this absolutely staggering, eye-watering spending. Let's connect those two dots and see the big picture. When you boil it all down, the strategy is as simple as it is bold. Spend whatever it takes on that foundational layer of AI, the data centers, the chips, the big partnerships, to create a wave of growth that lifts every single one of their products, from Azure to Office to LinkedIn. It's a total, all-in bet on AI as the future of, well, all computing. And hey, don't just take my word for it. They're being super open about this. They're telling investors right in their own filings that this level of spending is going to continue. They know exactly how much it costs, and they're signaling that this level of investment is just the new normal as they race to build out their lead in AI. And this really brings us to the final and I think most provocative question. When you see a single company spending over $30 billion in just 3 months on infrastructure, you have to ask yourself, what does this mean for everybody else? As the price of admission to the AI race just keeps skyrocketing, is this a game that only the absolute giants of technology can even afford to play anymore?